Welcome to Growth Investing Mastery. Today we're going to review Paymentus Q4's earnings with symbol PAY. And Paymentus enables billing for large enterprise customers. As a reminder, this is not investment advice or any recommendations to buy stocks. I'd like to review what my overall strategy is for reviewing an earnings transcript. And I'll look back at the previous transcript. In this case, it was Q3 for Paymentus. And I like to read it very close to when the next earning call is. So I reread the Q3 transcript on Sunday evening, and Paymentus was reporting after the bell on Monday. The next thing I'll do is write down the guide the management gave for Q4. And I'll guess where the company will actually land for those numbers. So based off what I find in the Q3 report, that will lead me to make a guess. And once the company reports, before checking the price, I will load the investor relation page. And that should have the press release as soon as the earnings come out. And then we can read through the press release and see how the numbers they actually got compared to our guesses. I also look at the new guidance the company gave. And then based off all those factors, I make a prediction on the stock price and what I think it's going to do after hours. Then once I check the price, I review the Q4 transcript. And I also note the future guidance the company gave and want to see where they're going next. When I look back at the Q3 report, I want to look for hints about what Q4 may have in store. And some quotes that stood out from the Q3 report were onboarding revenue at a faster pace than ever, onboarding a cohort of large clients in the third quarter that were originally slated to go live in 2025. So Paymentus had a number of customers sign up early, and they thought these customers would probably onboard in 2025, but they actually onboarded in Q3. And this also was a small concern for me as well, that they may have pulled forward revenue from Q4 and then Q4 would be light. The company also said Q4 is not really as different than you're seeing in Q3, and there is a seasonality aspect as well. Since the company mentioned seasonality, that's something we're going to want to look into. On guidance, they said they have a very prudent approach, but we feel very good about where we are. And that's encouraging when the management says we feel very good about where we're at currently. The company told us to expect seasonality in Q4. So what we can do is check back at previous years and see how Q3 to Q4 went. In 2021, the company had $102 million of revenue in Q3. And when they went to Q4, they got $108 million of revenue. And that's adding 6 net new million sequentially or quarter over quarter. When we look at 2022, they went from 128 million to 132, or 4 net new in revenue sequentially. And lastly, in 2023, the company went from 152 million to 165 million, or 13 net new of revenue. So we can see in all these years, Q3 to Q4 revenue went up. So we'd probably be expecting that in this current quarter, when they report Q4, it should be a higher number than Q3. Paymentus guided for 3 separate metrics in Q4. The first one was revenue, and they projected 215 to 220 million of revenue. They said that contribution profit will fall in the range of 79 to 81 million. And contribution profit is a custom metric for this company. And I mentioned when I'm selecting a stock on a previous video that we want to look at what the company finds important. So if the company finds that contribution profit is an important metric, that's something for us to track. Additionally, the third metric they forecast was adjusted EBITDA, and they said that'll fall in the range of 22 to 24 million. Before a company reports earnings, I like to guess where they'll actually land. And with the guidance of 215 to 220 million of revenue, I guess they would land at 245, which is significantly ahead of where the company is projected. On contribution profit, I guess that they would come in about 10 million above their estimate. And on adjusted EBITDA, I guess they would slightly beat that. When I checked the press release for Paymentus on the investor relations page, I saw that revenue came in at 257 $25.9 million, which was nearly 13 million above my own guess. And my own guess was already a very optimistic prediction. The 257.9 is up 56% year over year, which is really impressive for a software company. Additionally, contribution profit came in at 86.2 million, which was a bit below my guess of 92 million. So it might mean that profitability was not as strong as I expected. And I had guessed adjusted EBITDA at 26 million, and that came in at 27.3. So adjusted EBITDA was slightly ahead of where I thought, and that's good to see as well. In the press release, we also want to look at the new guidance that Paymentus gave. For Q1 of 2025, they gave revenue guidance of 241 to 249 million, which would be up 35% year over year. And because the company just reported 56% revenue growth year over year, this 35 number might seem quite low. But historically, Paymentus has been sandbagging their guidance, and they usually project a lot lower. And in the conference calls, they mention their guidance is very prudent. So we'll likely see revenue come in probably above 265 based off previous earnings. And contribution profit was 84 to 86 million projected, which is a slight tick up from the previous quarter. Adjusted EBITDA was projected at 24 to 26 million, and that's also slightly up from what they just reported. For the full year 2025, they're projecting revenue of 1,040 to 1,060 million in revenue. And you'll notice that the revenue they're projecting is at the current run rate of where they just landed. So they just got about 260 million of revenue, and they're projecting practically that all 4 quarters are going to come in around that range. So it's very conservative guidance. They're practically projecting each quarter is going to be about the same. But likely this company will be raising guidance every quarter as they go throughout 2025. For the full year, they projected contribution profit of 358 to 366 million. And for the full year, adjusted EBITDA of 112 to 116 million. After I read the press release, I like to predict where the stock price will go after hours. And this is the only place in my strategy where I make a prediction. Everything else is based on results. However, here, I like to see where the market thinks the stock will go. And I guess the stock would be up 8% after hours. But when I checked the price after hours, it was flat. And the general market was down huge on the day they reported. So it seemed like the market may have overlooked what Paymentus reported. However, the next day when the market opened, it was up 9%, almost exactly in line with where I expected. By the end of the day, the stock had rallied up close to 27%. So many market participants may have caught on to that Paymentus had a big report. However, today on Tuesday, the stock is back down again. So it actually is pretty close to my original prediction. The next part of the process is to review the transcript. And the transcript for most companies will be available hours after the company reports or the next day in your data provider. I use Koifin, which costs about $30 a month, and it has the transcripts. There's plenty of other providers who can provide the transcript for a low cost. And Paymentus gave 5 reasons that the company is doing well. They said there's continued sales momentum, strong bookings, significant exit backlog, onboarding success, and a phenomenal innovation framework. They mentioned there's a new potential expansion in their market, which is through interchange fees. And those are fees that are charged on each transaction. The company is reaching economies of scale, as they called it, and they're able to reduce the cost of goods sold, which is nice to see. We are receiving more inbound inquiries from large enterprise customers, they said, and Q1 guidance takes a prudent view. And they said, but even for Q1, we've been prudent in terms of how the quarter may shape up. Sales momentum is going really well, and exit backlog is strong. They also said the pipeline is actually also pretty strong. Let's look at some more aspects of the Q4 narrative for Paymentus. They said on the call, all of our verticals are doing very well. And that's encouraging that this product works across businesses and industries. They are designing a platform which can scale to any vertical or biller size. And when they were talking about the client's payment ecosystem, they said there's a pressing need to look at the entire efficiency. The company mentioned they do not have any contracts with the federal government yet, but that there could be opportunities. And I believe that leads to some potential total market upside. A lot of SaaS companies, such as CrowdStrike, already sell to the government, and a huge portion of the revenue comes from government. But here we can see the company doesn't have any portion from government yet. And with governments looking to modernize their payment systems, this could be an additional opportunity. Let's talk about some concerns I had with the Q4 report. And it's always good to take a look at the potential bear cases. Gross margin is still ticking down. 5 quarters ago, it was 30%, and this quarter it landed at 25.6%. The company has a reasonable explanation, though, that larger customers are onboarding. And when large customers onboard, they can negotiate on pricing a bit more. Paymentus has much lower OPEX than other SaaS companies, but their gross margin is much lower. So it's a different business model. And a lot of their revenue comes from transactions, and those transactions are low gross margin. However, unlike most SaaS companies, Paymentus is already GAAP profitable. And when we look at net income went down slightly sequentially from the previous quarter. So it was 14.4 in Q3, and it landed at 13.1. However, EBITDA was up Q3 to Q4, and the company says that adjusted EBITDA is the best metric to look at for Paymentus. That was up 37% year over year in the quarter. However, full year adjusted EBITDA was up 62%. So it might be a bit of a yellow flag that the full year EBITDA is growing faster than this quarter. So it's something to keep an eye on. Let's summarize the Q4 report for Paymentus. The company beat the top end of the guidance by 17%, which is a big outperformance. Future guidance was given at the current revenue run rate, but management emphasizes the company has a very prudent approach on guidance. The TAM is growing through additional interchange fees, and Q4 onboarded large enterprises in a similar way to Q3. And if you remember at the beginning of the video, I was concerned that Q4 might not be onboarding those same large customers as fast as Q3. But it turns out Q4 is also a big quarter. And we want to keep an eye on some of the profitability metrics, especially gross margin and net income, which weren't too impressive this quarter. But the company told us to follow revenue and adjusted EBITDA as the health of the business. So we'll stay tuned on Paymentus. And let me know below with a comment or like if you thought this video was useful. Thank you.